Good morning. I am Kanisha Coleman, the Beauty CPA, and welcome to 2021. Happy New Year, everyone. Um, I help beauty entrepreneurs save money with effective tax planning and bookkeeping services. For those who are newer to me, thank you for being in the Beauty CPA community. I really do truly appreciate it. And I want to say Happy New Year to everyone. This is our first tax town hall. I want to do these at least once a month for a lot of reasons, but one of the most important being because I get so many good questions from you all, and I usually get them in private. So, like, you'll inbox me or DM me or send me an email or even a phone call or a text message asking such great questions that I wish that, like, the entire community could hear. So I have these tax town halls so I can do two things. I like to be able to come on so that you can come on and get your questions answered live, and so that I can kind of address some of the questions that I get in private, so everyone will know. So that's what the tax town hall is, and like I said, I'll do these at least once a month. I may do them more often just because we're coming up on tax season really quickly, starting the end of this month. So I'll probably do them more frequently for tax season, January through April, and then again for the extended tax season in the early fall. But normally it's at least once a month. And I just need y'all to know the answers to all these great questions that I get in private. But before I go into that, I'm going to say that this is not like formal at all. I do have some talking points. That's just make sure I don't ramble. I just make sure I stay on point. But if you have any questions, feel free to throw them in the comments now, and I'll address them as we go on, throughout this session here. And I promise I'll try to keep these brief. I know y'all got things to do, so do I. Um, but yeah, I'll stay on point and I'll stay focused, and just drop your questions. Whenever they pop in your head, just drop it. You ain't gotta like wait to the end or nothing like that. This may have been like the earliest I have ever done this. This is I'm in Central Standard Time, so it's 8:30 here. I'm right outside of Chicago. So I want to know like how this time even works for y'all. I was doing them at first like early afternoon, like 1:30ish, and then I did it like, 3:30ish. And then I moved it later and I was doing it like 7:30. I was thinking about my West Coast folks that wanted to catch these live. So now I'm trying out earlier. So we'll see how that goes. If I don't see a lot of positive, feedback, I may go back to the later times when I know most folks will be off of work. So I do have a question here. So what percentage of gross probably revenue or gross receipts should be used towards various expenses? So I remember I did a live maybe a couple of months ago, and it was about budgeting for your beauty business. And in that session, we talked about financial KPIs for the beauty industry as a whole. And I gave some average KPIs to help you with your expense allocations. Now, I do not have those percentages in front of me, but if you go look at my IGTV, there is like a 30-minute live there that goes through expense allocations. It should say expense allocations in the title. It should. Or it should say budgeting in the title. But I'm forwarding you to that live because in that live, I use like slides. I use slides so you can see for yourself. I have these expense allocations listed, which are the beauty industry averages, right? But I wanna that's the resource that I'm telling you can go to get very thorough discussion that I gave a couple months ago on that. However, when you go look at that and you compare your expense allocation percentages to the industry average, I want you to take this with a grain of salt. And I say this in that live I did a couple months ago, because those are industry averages. Those are not telling you what you should or should not be doing, right? And the example I gave is like, if you live in like a really high cost state, like a California or New York, and your expense is really high, that's kind of understandable. That just means that you're subject to high rent and maybe even utilities. So maybe you need to adjust your expense budget in other areas, you know? So use it as guidance, but don't use it like set in stone where you think that you don't have a great budget because you're not meeting, you know, the average industry expense allocations. Just use it as guidance. And you know, budgeting is always a numbers game, right? If you have to give a little in rent or utilities because you live in a high state, you may have to pull from another area of your budget, and that's okay. That's okay. It's all a numbers game until you see that bottom line that you want. But yes, go check out that live I did a couple months ago in my IGTV, or if you're watching on YouTube or Facebook, you will see it in the past videos. It's literally called like expense allocations or budgeting or something like that. So I hope that helps. If it doesn't, reach out to me and we can get together and have a further conversation. But yes, this tax town hall, I have been getting tons and tons of questions about PPP 2.0. So I gave a live last week, New Year's Eve. I gave it on New Year's Eve, and I talked about PPP because it was New Year's Eve fell during a week right after the law had been signed, and they announced that they were reopening the PPP program. Okay, so I gave a live on that, and since that live, I got a ton of questions. So I just want to come back on and kind of address those questions and give a little more information about the PPP program. PPP 2.0. I like to call it free money 2.0 because if you play this game right, that's literally what this PPP loan could be for you. It literally could be free money if you use the money how it's supposed to be used. And yeah, if you use the money how it's supposed to be used, you can get it forgiven and you can really come up off of it. So let's get into PPP 2.0. Just a real quick note, because this is PPP will likely take over this conversation because it's a lot. But the IRS opens January 27th. January 27th is when the IRS opens. When I say open, it means that they'll start accepting e-filings of your tax returns. That's what that means. Your anybody you're doing business with and they owe you some tax documents, most of those documents are due by February the 1st. Okay, because I think the 31st falls on a weekend, on a Sunday. So February 1st is a Monday. So expect to have those documents not in your mailbox by February the 1st, but likely in the coming days. They have to be postmarked and mailed by the 1st. So expect those. IRS opens January the 27th. So I say this not just because to let you know, but also if you ain't been doing bookkeeping all year, you need to get that together. You got about, what's today? The 6th? You got about 3 weeks. 3 weeks to get your books together. I'm going to do a session on how I suggest you do that in the most effective way possible. I'll do a session, but just keep in mind that tax season is here. It's opening in 3 weeks. And if you want to, be proactive and get in as soon as you can, you need books and records and that you should be starting to get those together. Just look out for notifications from me that's when that session will be on how to get your books together for tax season. It will not involve you establishing like a whole new bookkeeping system in your business. We ain't got time for that. We don't have time for that. I'm going to show you a quick and dirty way, get the books together to be able to hand your tax preparer just a sheet of your financials, and they can do your tax return quickly and efficiently. I will warn you, if you go to a tax preparer with a box of receipts, a folder of receipts, an envelope of receipts, if you go with bank statements, merchant statements, PayPal statements, Stripe statements, Square statements, whatever you use, that is not sufficient, and your tax prep, sir, it will cost you more. It will cost you more if you go to a tax professional to prepare your taxes and you do not have your books together. All you got is bank statements and receipts. They're going to charge you. It's going to be high. So you can get your books together yourself, save a little coin, save a little money. Okay. So just look out for notification of that. It'll be coming in the next week or so on how to get your books together quick and dirty, ready for tax return time. All right, let's get into PPP 2.0. PPP 2.0. So, signed into law December 27th. Our president signed into law December 27th. It was a Sunday because I was watching. Because at first it was like, I ain't gonna sign it. But then he put up a fuss about signing it. And then everybody like went crazy, like, how you not gonna sign it, right? Because it was tied kind of to our stimulus money too, which y'all should be getting if you're eligible to get it. Y'all should be getting it this week. But then he signed it. It was like a Sunday night. He signed it. Woke up Monday morning to news that the law was signed and it allocated $284 billion to reopening the PPP program for small businesses, right? So it's just a little different this time. And the differences, there are not bad differences. These differences come because, as I'm sure y'all remember, a lot of people was committing fraud. A lot of the bigger businesses were finding loopholes in the law and technicalities that was allowing them to get millions of dollars for their huge businesses, which they probably didn't need anyway, thus taking from small businesses. And we just didn't like that. We didn't like that. So they closed all those loopholes, right? They closed all those loopholes. But let me get into eligibility first. So if you did not get a loan the first go around, you can go get it this time. That's a question I've been getting a lot. If I didn't get it the first time, can I go get it now? Yes, you can go get it now. Now, because you are new, because this is your first PPP loan, you will be subject to the old rules, which is not a bad thing. Okay. So like, for example, the old rule said you can have up to 500 employees. The new rule says you only can have 300 employees. I'm sure that's not an issue here with anybody watching this, but that's just an example of the difference between the rules. Another rule that you'll love is that for you first-time PPP loan getters, you do not have to show that you had a decrease in revenue. Now, for this go around here, PPP 2.0, you do have to show that you incurred a loss in your business. But if you're a first timer, you do not have to show that. You can just, go get your loan. So another question is, okay, if I got a loan already the first time, can I go get some more money? Yes, you can. They're calling it a second draw. Okay, if you have PPP money, loan money already, and you see that it's open again, and you want more, you need more, you can go get more. Now, you do have to show that you incurred a loss. You have to show that your gross receipts from your business, or gross receipts, revenue, money that you made, suffered at least a 25% reduction in either 2020 Q1, Q2, or Q3 compared to 2019. So I want you to envision this with me, and I wish I could have, had like a slide deck or whatever to show you like quantitatively what this looks like. But go to your books and records, and this is why I preach bookkeeping. I know I sound like a broken record, but that's why I preach bookkeeping, is because for this PPP loan, you have to show that you incurred a loss 2020 compared to 2019. Well, how will you even know that? You have to have books to go back to look to, right? And whoever you're getting your loan through, your banker or whoever, they're going to ask for books and records. They're going to ask for it. So you got to have that stuff together. Hopefully you've been keeping up with bookkeeping and you do have it together. But if you have a PPP loan already and you want to do a second draw, go to your books and records. Look at your P&L, your profit and loss, or your income statement. Look at the revenue and you could, if you're using like QuickBooks, you can do this very easily. Look at the revenue for Q1, Q2, and Q3 of 2020, and then compare that to Q1, Q2, Q3 of 2019. If you see that there was a decrease, calculate the percentage difference of your decrease. And if it's at least 25%, you are eligible for a second draw of your PPP loan. Okay. Now, you can only have one primary PPP loan and one secondary. Okay. One primary and one secondary. And that loan amount is determined by 2.5 times your average monthly payroll. Now let's talk about that for a second. And I have a question from my dear cousin. Thank you, cousin, for watching. I have a question, and it's regarding, like, what if you don't have employees? Now, this is going to be for most of you watching. Most beautypreneurs, actually most small business owners, actually don't have employees, right? You may have workers, and maybe they're considered independent contractors, but most small businesses in our country do not have employees. So then where does that leave the self-employed, the sole proprietor, the independent contractor, the freelancer, right? If you're filing on Schedule C of your Form 1040, where does that leave you? Okay, your loan amount will be based off of line 31 of your Schedule C, which is the net profit line. That's what your loan amount is based off of. Line 31 of your Schedule C, which is the net profit line. So let's do a quick accounting review. What's net profit? Net profit is all the money you make in your business minus all the expenses that you have. And whatever you have left over is your net profit. Now let's think about this for a second. If you are a business and you are, your net profit is positive, that's what you took home during the year to quote unquote compensate yourself, right? That's the profit you were able to pull out of your business to live off of. And that's what they will base your loan off of. Let me make this clear. There's another question I get all the time. What about if you had a loss or you broke even? You look at line 31 on Schedule C and there was zero or a negative number, meaning your business incurred a loss. You are ineligible for the PPP loan. Because they're saying, in theory, they're saying, well, your business produced a loss, which means that you didn't live off any of the money from your business. It wasn't money that compensated you in any way. So why would they give you a loan or a forgivable loan based off, a no profit, right? The point of this loan was to retain employees or make up for compensation costs. That's the whole point of this loan. PPP stands for Paycheck Protection Program. So it was designed and it intended to make up for lost compensation. Regardless of whatever type of entity you are, it was designed for. So if you're a Schedule C filer, sole proprietor, self-employed, independent contractor, freelancer, and your Schedule C showing a loss, that means that you were not compensated, quote unquote, from that business. So they're not giving you a loan because you had no compensation in the first place. You didn't lose any compensation, right? So that is unfortunate. It really is. However, that is what the rules are. Now, for this go around, the SBA can change that, because I'm sure they got a lot of feedback and flack off of that, because that point really did hurt the businesses that incurred losses last year, as shown on their tax return. But they could change it. So if any new guidance comes out about that, I will let you all know. But for right now, if you broke even or incurred a loss, and you can see that, go to your Schedule C, line 31, and if there's a zero or a loss or a negative number there, it's a no-go. Sorry about that. Anyhow, so for the second round, the max loan is $2 million. I don't know if you guys remember, but last time it was 10 million. So if you're a first timer, your max loan is 10 million. If this is your second draw, your max loan is 2 million. And again, it's 2.5 times your monthly average payroll cost. Now, let's talk about forgiveness. I'm not going to go real deep into forgiveness. That deserves its own session in itself, how to apply for forgiveness. But just keep in mind, if you get this money, to have it forgiven, to make this free money that you do not have to pay back, okay? You have to spend it on eligible expenses, right? 60% has to go towards payroll cost. And I use that loosely because that depends on your entity structure. But 60% goes on payroll or compensation costs, including benefits, right? And then 40% can go towards other eligible expenses. Now, the first go around, the eligible expenses, they're pretty self-explanatory. So it was like on rent. It was like, on utilities. But this new bill, this new law, it really expanded what you can spend the money on. It expanded what you can spend the money on. So let's talk about the new things. You can spend money on PPE. So like all of the stuff you wear to protect yourself from the germs and the gloves and the mask and the shields, all of that stuff you can spend the PPP money on, and it is eligible for forgiveness. You can spend it on property modifications. So if you have a workspace and you put up, like, for example, like the plexiglass, right? So that, you can be shielded from your customers coming in, all of those costs and anything else you did to your space to comply with COVID regulations, you can spend the money and it can be forgiven on that as well. You can spend it on software, cloud computing, HR, and accounting. Remember, tax does fall under accounting. It's a type of accounting. So you can spend it on all of those things. You can spend it on property damage caused by disturbances. So in my mind, that's kind of like looting, right? We had our fair amount of protests that ended up in some riots. We had a fair amount of that this year. So if you were affected by that, if your space was affected by that, and you were not recompensated by insurance, because a lot of insurance does not cover looting or riots, you can spend this PPP loan money on that, and it can be forgiven. And then lastly, any cost you incurred to suppliers for things that you needed to operate your business. Oh my God, that's like almost anything. It really opens the door for almost any business expense. So just remember, you get this money, you spend 60% of it. Spend 60% of it on payroll or compensation costs, and then the rest on these eligible categories. All your whole loan can be forgiven. Y'all, this is free money, okay? I want you to remember 2 tidbits about PPP, all right? If the money's forgiven, it's tax-free. Normally when loans and debt are forgiven, usually you have to report on your taxes because it's kind of like income to you. But for PPP, it is not income, right? So just remember that. If you apply for forgiveness last year or this year, just remember when you're prepping those returns, do not include those loan amounts as income on your tax return. And then the expenses that you paid with PPP money, those expenses are still tax deductible. Now, before, like literally a week ago, that wasn't the case. They were not going to allow you to deduct those expenses. But the new law fixed all of that. So now, money you spent, expenses that you paid with PPP loan funds are now tax deductible still. So just remember that when you're doing returns for this year, right? Tax season is coming up. If you paid those, rent, utilities, whatever, with this money, you still can deduct those expenses on your tax return for 2020, and then again for 2021 if that's when you apply for forgiveness. And now I know I went through that pretty fast. If you guys got any questions, let me know. Again, I just want to reiterate, you do not have to have employees. You could be a Schedule C filer. You could be a partnership. You could be, an S corp with no employees. But you either were on payroll as an owner or as a Schedule C filer or a partnership. Maybe you just took the profit that was left over for yourself. Use that as your loan base for what you're eligible for, because that's kind of like in theory, that's your those are your payroll or your compensation costs. This is a great opportunity, guys. It's when the new law was passed, December 27th, the SBA has 10 days. They have 10 days to issue new regulations as to how it's going to be, this new round is going to be, how it's going to function, right? They have 10 days to issue new regulations. Those regulations have not been issued yet. I know that it's coming. How many days has it been? It's coming. It's soon. I'm thinking it's 10 business days, not real days. And then we had a couple holidays in the mix. So it is coming soon. But as soon as it opens, you have until March 31st of this year to either apply for your first loan or get a second draw if you've already, had a loan the first time. So remember that. Do not miss out on this opportunity, guys. One other thing I want to bring up is kind of like some tax updates. Have you? I don't know if you guys have been watching, but I'm kind of like a political junkie, right? And I'm not using this time to get political on y'all. This is not the platform for that. But I watch it for two reasons. One, it's entertaining, but two, I'm in the tax profession, and tax is very political, right? So I say that to say, okay, if you've been watching the election, last time I looked, there was the Democrat in Georgia, one of them, the race was called for them. And then the other Democrat was leading. The reason why I bring this up is because if those Democrats in Georgia win, then the Democrats take over the Senate, which means Biden and Harris, they're going to inherit a Democratic ran House and Senate. This is important. This is important because if their administration is coming in, if a Democratic administration is coming in and they have the House and the Senate, most of Biden's agenda will come to fruition, right? And if you've been paying attention to this narrative, then that means is Biden is very pro small business, and he has plans to provide a heftier COVID relief funds to small businesses. So I want you guys to don't become a political junkie like me. Sometimes it takes over my life. I don't get enough sleep watching it. However, I think that keep your eye out on the news for this, because they may implement some new COVID relief programs or make funds available for small businesses, and they have the power to do it now if this last Democrat Senate wins in Georgia. So that's a good thing for you all, especially since our industry has been heavily affected by COVID. This new money can help greatly. Another thing is, from what I hear, we'll know if this actually happens, is if they actually win and they control both houses, right? We may get that extra stimulus money we wanted. Now, remember, we just got only 600, and all of you should be getting yours if you're eligible. However, remember, they were talking about 2,000. So maybe we'll even get that difference, right? Biden comes in, they settle in, right? We control that. The Democrats control. I said we. Yes, I did. We control both houses. They can go ahead, and vote and get that extra stimulus money passed. So look out for that as well. This is why, not like I said, not to use this platform to promote any political, way. I'm not trying to do that. What I'm saying is the politics of what's happening and how it affects our industry and your business, right? The Democrats that come in and control both houses, you're going to get extra money for your small business. At least that's what the incoming administration is saying is on their agenda, is to provide more COVID relief funds to small businesses since it was hit pretty hard by COVID. So just watch out for that. Just watch out for that. Because when that money becomes available and stuff gets signed into law, you guys got to have your ducks in a row to be able to apply and get this money. So, for example, like I said, PPP will be opening anytime now. And it'll be available only until March 31st. The first quarter will fly by. You got to have your ducks in a row, have your books together so you can just go to your banker and apply and get your money. So if you do not have books, if you do not have books and records, if you cannot go produce financial statements for 2019 and 2020, go do that now so that you're ready. That's my point. Okay. So have a great Wednesday. I don't see any other questions. If you do have questions, feel free to DM me, inbox me. You can text me, call me, email. All of my information is in my bio. And if you click on those links, you can see links to book a call with me. We could talk about it, your situation more specifically. But other than that, guys, have a good rest of your Wednesday. It's midweek. We're almost through the first week of 2021. I hope you found this helpful. Do not miss out on this free money for your business. And you guys will see me for another section next week. I do these I try to do them every Tuesday or Wednesday. Try to do them every Tuesday or Wednesday. No problem. Get sugar certified. This is what I am here for, is to provide you guys information to help yourselves and your beauty businesses like flourish, right? So again, yes, you'll see me live again next Tuesday or Wednesday. I'll be coming with topics, accounting and tax topics to help you in your beauty business. Again, I'm Kanisha Coleman, the Beauty CPA, and I help beauty entrepreneurs save money with effective tax planning and bookkeeping services. My main mission is to get you to a point where you're paying the least amount of tax legally possible. All right, guys, I will see you next time. Have a great rest of your day.